Thanks for tuning into Katina's Weekly News. Did you know that the majority of our viewers haven't subscribed yet? If you enjoy our content, I would be grateful if you could hit that subscribe button. It supports us and help the YouTube algorithm share our stories with an even bigger audience. Thanks for being part of our community. The exciting financial news. Bitcoin has become the seventh largest global asset with a staggering market cap of $2 trillion, a major boost. Spot Bitcoin ETF opening doors for institutional investors and solidifying the crypto place in the traditional finance. Plus, stablecoin and AI innovation fuel the growth across the entire cryptocurrency sector. But analysis remind us, while the long-term potential looks bright, volatility still looms. So buckle up. It is a thrilling ride ahead for crypto enthusiasts. In positive news for the global economy, Goldman Sachs is forecasting a healthy 2.5% global GDP growth in 2025. The US is expected to lead the developed markets with solid 2.4% growth, as the Federal Reserve plans to cut interest rate 3 times next year. Over in the Eurozone, growth is projected at modest 0.8%, while China's economy may slow slightly to 4.5%, while challenges remain in this outlook, signal resilience and the recovery for many economies. There's a growing optimism in the crypto world as 2025 approaches. Industry leaders, including executives from the Ripple, Coinbase, are hopeful about clearer regulations under President-elect Trump. They are championing stronger legal principles and judicial independence to guide the sector. Meanwhile, major criminal cases involving former Celsius and Terraform Labs executives are set to dominate the headlines this year. Adding to the buzz, Trump has proposed leadership shakeup at SEC and US Attorney Office, signaling potential changes ahead. It is a pivotal moment for the crypto industry, one to watch closely. The IRS is offering a bit of breathing room for CeFi crypto investors in 2025. A new temporary tax relief measures allow taxpayers to bypass default FIFO accounting methods by using personal record or tax software instead. But there are more on the horizon. New broker regulations will take full effect in 2026, requiring investors to choose their accounting methods. Meanwhile, the IRS is facing pushback for expanding definition of brokers to include DeFi platforms. It is a complex landscape, but this relief offers a welcome pause for many navigating crypto taxes. Morgan Stanley might be gearing up to shake things on its e-trading platform. Reports suggest they are exploring adding crypto trading, a move that aligns with President-elect Trump's pro-crypto policies. If it happens, it could give Coinbase some serious competition, with e-trading already boosting 5.2 million retail clients. But for now, there are no official word from Morgan Stanley. It is an exciting possibility though, and one that could reshape the crypto trading landscape for every investor. S&P Global Composite PMI actual value is 55.4, slightly below the forecast of 56.6, suggesting slower economic growth than anticipated but still indicating expansion as it remains above 50. S&P Global Services PMI, the actual value is 56.8, lower than the forecast of 58.5, indicating weak external demand which may impact trade surplus. Exports. Actual exports are 273.4 billion, up from 266.3 billion last month, reflecting robust international trade activities and stronger global demand. Imports. Actual imports are 351.6 billion, indicating an increase from previous month contributing to trade dynamics. Trade balance. The deficit is negative 78.2 billion, slightly better than the forecast of negative 78.3 billion, reflecting a rise in imports compared to exports. ISM non-manufacturing PMI. The actual value is 54.1, above the forecast of 53.5, indicating expansion in the non-manufacturing sector and stronger growth in services. ISM non-manufacturing prices. The actual value is 64.4, significantly above the forecast of 57.5, suggesting rising input cost and potential inflationary pressures. Job openings. Actual openings are 8.098 million, exceeding expectations and indicating stronger labor market that may support monetary tightening by the Federal Reserve. 10-year note auction. The yield is at 4.68%, higher than the previous auction's yield of 4.235%, reflecting increased borrowing costs likely due to inflationary expectation. API weekly crude oil stock. A decrease of negative 4.022 million indicates tighter supply conditions which could lead to upward pressure in oil prices. ADP non-farm employment changes. Actual job conditions are 122,000, lower than the forecast of 139,000, suggesting slowing labor market growth. Continued jobless claims. At 1.8 million, this is slightly lower than expected, but showing marginal stability in unemployment trends. Initial jobless claims. Actual claims are at 201,000, indicating strength in the labor market with fewer layoffs than expected. Crude oil inventories. A drawdown of negative 0.959 million suggests stable supply-demand conditions but could weigh slightly on oil prices. 30-year bond auction. Yield at 4.93%, indicating weaker demand for long-term treasuries and amid inflation conditions or higher interest rate expectations. Consumer credit. Significant decline to negative 7.49 billion indicates reduced consumer borrowing and caution behavior amid economic uncertainties. Average hourly earnings at 0.3%. This aligns with expectation and suggests steady wage growth without inflationary pressure. Non-farm payrolls. Stronger job growth at 256,000 exceed expectation significantly, it indicating robust economic growth. Unemployment rate at 4.1%. This slightly better than the forecasted, showing a tighter labor market aligned with the stronger job growth indicators. Thanks for joining us for this week Katina News. Next week, all eyes will be on key economic indicators for December. We will be looking at the core CPI month over month, the CPI year over year, and both core retail sales and the retail sales on month over month. Additionally, the producer price index month over month will be released, offering a glimpse into the inflation trends from the production side. Stay tuned for these important updates next week. Thank you for joining with us.